Hi everyone, Donna here with Bookkeeping Made Simple, and today I am just going to kind of talk about a few things um, about why real-time accounting data is so important and why we do what we do. Now, I apologize, I have not put up any videos in like a week. I have been um, working on my other business and visiting my parents in Western Kentucky. Um, and so it's taken precedence. So getting back to it. A lot of business owners, and of course, before I jump in, as always, if you enjoy these videos, please like, share, and subscribe. I apologize for the horrible video quality on this. It looks to me like my laptop camera is dirty, and I have cleaned it, and I can't figure out why I'm getting this bad picture. So maybe I need to lean forward or something. Anyway, we're going to jump right in. A lot of business owners depend on their tax returns or quarterly reports for the information that they need to run their business. There's a big problem with that. Accounting by its nature is backwards looking. So as an accountant, I'm much more concerned with transactions that have happened in the past and making sure that they're recorded properly. The question now becomes, what do you do with this information? And right now I'm doing projections for several clients, which means I have to now look forward. A lot of clients don't ever do that. And a lot of business owners don't. They kind of go off of the bank account method. In other words, as long as I have money in my bank account, I should be fine, right? Not necessarily the case, but I understand their thinking. So rather than waiting a long time, such as once a quarter, to go over financials, we go over financials with our clients once a quarter, but we are working in the books every week. And the reason for that is to make sure that the business owners, my goal with this is to have my business owners have enough information and education to eventually be able to go in and read those reports themselves and understand what they mean. Maybe not a really super deep understanding, but at least a general understanding of, is their business doing well? And sometimes it's just a matter of teaching them how to read these reports, because most people have never read financial reports before. I laugh and say I've taken whole classes on how to read them. Massive amounts of information on how to read these reports. So I don't think less of anyone else because they haven't had exactly the same education I have. If we were all exactly the same, life would be boring anyway. So we want to make sure that we are in the books every week. We want to do this for a number of reasons. One is, personally, I have laughed about this and said, I have pulled up my own bank account feeds, my own bank feeds going into my own QuickBooks, and seen maybe something that went through Venmo that I couldn't remember what I'd spent the money on. I had to open Venmo and look and see who I'd sent the money to, and then go, oh, that's right, that was to my niece for my haircut, you know. So it's really easy to forget what you spent money on. And it's many times it's these little details that make a world of difference, particularly in your financial statements. So if you have access to real-time or close to real-time information about your business, you're going to be able to you will have the information at your fingertips to make informed, thoughtful financial decisions about your business. Now, I always joke and say it doesn't necessarily mean that they're good financial decisions, but at least they're informed. They are not guesswork. It is, you can go back through, you can call us and talk to us about what your margins are, how much you should, what is an acceptable interest rate to you, what your plan is to pay off debt. And as we're starting a second business, me and my husband, we are we've been talking quite a bit about how most business owners, especially most newbie business owners, people who've never owned a business before, they try to run their business like their household. And that means that they're basically guessing in a lot of ways. They're not thinking ahead to, oh, if I buy this piece of equipment for $20,000, then in X number of weeks, I should be able to make back $20,000. And after that, even though you may still be paying on a loan, after that, you've earned it back. So there's a lot of things that have to be done. And again, accounting by its nature is backwards looking, finance is forward looking, and we need to have some information from the accounting side to be able to do the projections. But you really want to have your books up to date all the time. Also, a lot of times our clients will be needing information to make these equipment purchases. So they need to be able to get this information to underwriters in order for the underwriter to decide if they're a good risk for a loan. And again, what the underwriters, if you're looking for a loan, they're going to look for your current ratio, your debt to income. It still applies for businesses. They're going to see if you can make your current debts, or at least your current debt payments. So there's a lot of things that I've had one client ask me if the balance sheet was really all that important. The answer is yes, you need to have that right. And the sooner we can get that information into QuickBooks, the more accurate it's going to be. Another thing I do like to do, particularly with the businesses that I run myself, that I am either a partner or an owner of, is I like to put detailed notes in the memo section, usually on the bank feeds. It'll have the bank feed information there. And then I'll put additional information in there as well, such as, this was shipping costs for our trucks to go back from Tennessee to Utah, or things along those lines. So that I personally can remember what to do with that. Now, I don't do that all the time with clients because I don't have that really close, I'm not that close to that information. That's something the client has to provide to us, but we're happy to do it. If you have inventory, you need to know how quickly you're turning over inventory, what items are selling, what items are just sitting there taking up space in your warehouse. You need to figure out what is going to be in demand. We are coming into the final quarter of the year. That means my calendar popped up yesterday and said it's time to start Christmas shopping, which I planned for that obviously well in advance of Christmas. But that also lets me know that starting next month, people are really, retailers are already, they're putting out Christmas stuff. So this is the time that a lot of retailers are about to get very busy, and they need to know what's going to be moving and what they need to maybe convince consumers to buy rather than just wait on. So we also, when we do projections or create a business plan, the very first thing we need to know is what are our expected sales. And that depends on what your return on investment is on your ad spend and how efficient your sales team is. So that's something we want to keep an eye on, especially with an established business that they've had time to get started. When you create your very first business plan, it can be kind of interesting to see how we think sales are going to be, and I've historically guessed low. But we need to know, generally what sales are going to be. Sometimes it's already done for you. For example, if you decide to run a dump truck business, which is pretty popular in the West right now, there's a lot of infrastructure spending that's going on. you're going to already know what the different dispatchers are going to pay you per hour. And so you can then project that based on the number of drivers, the number of trucks, the number of hours you expect to have your trucks in service. Other things, other businesses, mine kind of depends on my ability to sell. So there's a lot of variables in that. That's the word I was wanting. But I really do want to make sure that I know what my close rate is, the average dollar amount per month of sales, what my pricing strategy would be. I need to go through and I have been going through and seeing how much do I spend on particularly payroll per client. And do we pay for their QuickBooks subscriptions as well, which I no longer offer that, but I have some clients that were grandfathered in. I haven't gotten them off of my QuickBooks yet, off of my QuickBooks subscription payment yet. And QuickBooks is raising prices. So I have to keep all that in mind as I'm going through and I'm looking to see, am I paying out more for this client than they're bringing in? So that's something that I need to know. We also need to know if I run a promotion, what am I going to be able to promote? And is it going to be effective? If you're like a restaurant or you send out coupons, you want to know if those coupons were effective in bringing more people in the door and increasing your per ticket sales. So there's a lot of things that we would want you to know about your business that you can get from having your books kept up to date all the time. Forecasting, I mentioned we're doing some projections that involves a lot of forecasting. And when I'm doing those, I have to actually go through and figure out what their historical rate of growth has been. And do we expect that to continue, to stagnate, or to shrink, to continue with at the rate at which it's growing, or if it's just going to kind of stay the same. So we look back for the historical information on that so that we can project forward. And in order to do that, we have to have the books accurate and up to date. One of my clients, who is an absolute gem, if she's watching this, I don't know if she will know who she is. I try really hard to make sure there's nothing personally identifiable when I talk about my clients, because I do take confidentiality very seriously. But I have several clients that have messy books that we're trying to clean up. And a couple of them, we're trying to make sure that they are a couple of them need projections. And in order to do the projections, I have to do the bookkeeping to make sure that the projections are based on accurate information. We do these projections because we want to know if they're meeting their goals. We want to know if we want to know all of these little insights, all of these KPIs that are going to be necessary for the business owner to make informed decisions about their business. And it always goes back to that. A lot of accountants just work on their client books once a year when it's tax time. We work on our client books every week. And that is because we want our business owners. Business ownership is hard. It is hard work. It is close to your heart because it's your own business. It is not for everybody. It's certainly not for the faint of heart. And it is, you end up putting your own time and energy and money and treasure and effort into it. So it's not for everyone. A lot of people just prefer to work 9 to 5 and be done. And when you're the owner of the business, you are on call 24/7. Even if I enforce office hours for my own sanity, but really I'm constantly thinking about my business and I'm trying to come up with ways to make it run more efficient. So, which I don't expect of my employees. So there's that. There's a lot that really goes into that. Also, if you have this information at your fingertips, it can also prompt you to offer better customer service. Now, that may sound strange, but if you can see in real time how your business is doing based on the quality of service you're providing to your customers, then you're going to provide better customer service. And so we want to help you make sure that you get the information you need. And QuickBooks has a ton of reports. It's all based on the data we enter, but QuickBooks has a ton of reports, and I can do a lot of analysis on those reports that are available to help you understand how your business is really doing financially, what you can improve, what you might need to change, and how that's going to benefit your business. So all of that to say, it's critical to have your books worked on frequently. Looking at your reports once a year or once a quarter is just not sufficient. And I would encourage you, if you're a business owner, to keep an eye on your books all the time. And with that, I'm going to go ahead and close. Thank you very much. I appreciate you listening, and I will talk to you soon.